Hi folks, I'm the Mortgage Patriot, and we're going to talk about FHA loans because I want you to know that there's reasons why you'd want one. There's certainly reasons why you would not want one. And we're going to talk about the differences, pros and cons, loan limits, loan restrictions, and basically everything there is to know. And at the end, you're going to be a little surprised because FHA, I'll tell you right now, a little spoiler alert, does have one really great niche product that you probably didn't know about that you're going to want to hear about. So let's kick this off right now. I'm Kevin Fagan, I'm the Mortgage Patriot, and let's talk about a deep dive into FHAs. Now, FHA is not for everyone. Typically, it's for first-time home buyers. It doesn't have to be, so it's not restricted to first-time home buyers. The FHA loan can be applied to anyone. There is no income restriction for that matter. If you make $50,000 a year, if you make $500,000 a year, you could still apply and still be qualified for an FHA loan. What are some of the advantages? Well, there's two main ones, and I'll point out a third later on as I talk about the niche product. But the first two advantages are lower FICO scores, lower credit scores, and lower down payments. Let's get into that right now. What are the FICO score limitations or criteria? If you have a 580 score or better, you can get an FHA loan, and it'll allow you to have a 3.5% down payment. So you're only coming out of pocket for 3.5% on an FHA loan at a 580 score or better. So that's an incredible advantage over a conventional loan. Most conventional loans only allow you to go down to 620. Some will allow you to go down lower than that, it's true, and I have availability to those lenders, but the interest rate becomes just astronomical. And so it doesn't make any sense at all to try to do that. What are your options below 620? If your scores are, say, 608 down to 580, you can apply and qualify for, under most circumstances, an FHA loan and still enjoy that 3.5% down payment. There is a caveat to that FHA FICO score. You can go below 580. You can go all the way down to 500 in some circumstances, 500 to 579. In that range of scores, the FHA does require 10% down instead of 3.5% down. So again, 500 to 579, just below 580, you're allowed an FHA loan if you can come up with 10% down. Now, let's talk about the down payment. 580 score or better, FHA allows you to come out of pocket for only 3.5%. Again, that's a tremendous advantage. Most conventional loans only go down to 5%. There are some conventional loans that will allow you to go down to 3%, but that's an income restricted type of product. So the FHA loan allows, again, 3.5%, which is a striking difference. Secondly, most down payment assistance programs are linked to FHA loans. So in other words, I can provide, for example, down payment assistance programs, but all of them say you have to go through the vehicle of an FHA loan. Most of them do not allow for a conventional loan, which is fine. So again, that's just an advantage of the FHA product is that it links to most down payment assistance programs, whereas conventional loans don't allow for that. A great deal. And again, as we mentioned, below 580, you have to come out of pocket for 10%. Another advantage of the FHA loan is that it is easier to qualify for. It's got looser guidelines. So what do I mean? In a conventional loan, for example, your debt to income ratio, your size of your debts relative to your income is lower than the debt to income in an FHA loan. Now, I don't want to get into the weeds of what those numbers necessarily are, but just understand that your debt to income ratio is simply just your number of debts, your car payments, your credit cards, your student loans, installment debt, all that wrapped together, and your mortgage for that matter, your principal, interest, property taxes, and your insurance, all those debts divided by your income. So that is the debt to income ratio. That's the components of it. And in the FHA world, those debts can be much higher as a ratio than a conventional world. So that's a tremendous advantage for the FHA. So not only you come out of pocket for less, your FICO scores are less than a conventional loan, but lastly, the debt to income ratio can be higher. You are allowed more debts relative to your income than a conventional loan. So This leads into why then wouldn't everyone want to be in an FHA loan? The answer is an easy one, and it's a harsh one once you learn it. It is the mortgage insurance premium. There is a monthly mortgage insurance premium attached to every FHA payment. So in other words, on a monthly basis, not only are you paying the principal and interest, but you're also paying what they call mortgage insurance. Why are you paying the mortgage insurance? Because the FHA insures these loans on the lender level, meaning whoever you take this loan out through, who's ever providing the funds to you, is going to be insured that if you, in the case of bankruptcy on your part, that lender is covered and they will not have any losses attached to that loan. There's an incentive for the lender then to extend the FHA loan because they know that it's insured. But who's paying for the insurance? Well, you are. So that's why you have what they call an upfront mortgage insurance premium, and you have a monthly mortgage insurance premium. I'll say that again. You have upfront mortgage insurance premium, and that is about 1.75% of the loan amount. And then you have an internal monthly mortgage premium involved in every mortgage payment to the tune of about 0.8%, 0.8% of the loan amount. How does that all work? Well, here's an example. So let's go back to the concept of the monthly mortgage insurance premium. And again, that's an added cost in addition to your principal and interest. How much is it? On a $300,000 purchase on a property, the loan amount is going to be $289,500. Where did that number come from? It's 96.5% of $300,000, because again, you're going to come up with 3.5%, and the loan itself is going to be for 96.5% of, in this case, $300,000, $289,500. Now, how much is the monthly mortgage insurance premium? We multiply that amount times 0.8 and divide that by 12, and what do we get? In this example, we'd have an expense of $193 per month for mortgage insurance because it's an FHA product, and you have to pay that monthly fee. That can be a pretty good chunk of change for a lot of people. So this is the big downside of an FHA loan and why not everyone is suitable for it, nor would you want one. Because here's the other thing about that mortgage premium. It never goes away. But over time, there's going to be better alternatives for you. You're going to want to get rid of that. And you can get rid of it in the form of a refinance. So most people start off in an FHA loan, and once they gather through the years enough equity in their property to the tune of 20% or more, then they refinance into a conventional loan, thereby dropping the mortgage insurance premium. Let's talk about one niche product that the FHA has that really is outstanding, and that is the renovation loan. They call it the FHA 203K loan. This allows you, imagine this, if you want to buy a home, and it may be an older home, but it needs some either upgrades or it needs some flat out fixing. AC's out, or it's got just, shag carpet, and you want to replace that, of course. You want to replace some lighting fixtures because they're from the 80s or 90s. You want to just basically do a complete upgrade on the home. FHA allows you to do that and roll those costs into the loan. So what an incredible advantage. Let's say you're looking at a home for $250,000, but it's priced that way because, frankly, it needs $30,000 to $50,000 worth of renovation. But you obviously don't have that kind of cash after certainly paying down that down payment and closing cost. You don't have anything else left over, or you have little. You don't want to use up all your capital, but you want to have upgrades to your home. This is the perfect remedy and the perfect answer and solution for this kind of scenario. So let's talk about the last real big advantage to an FHA loan, and that is with multifamily. So what do I mean? I mean, you can obviously buy a single home with an FHA loan, but you can also buy a duplex. You can also buy a triplex or even a quadplex, right? 4-unit home. So FHA allows you to go from a 1-unit to a 4-unit. And these price points increase per the number of units. So for example, in most counties, FHAs extend to about, in terms of a loan limit, to about $420,000. But if you're buying a duplex, where you're obviously moving in on one side and you want to rent out the other side, then your loan amount goes to about $538,000. That's a major advantage as well. Also, on a triplex, it goes to about $650,000. So these are all still with 3.5% down. So imagine buying, for example, a triplex, and you're spending somewhere in the neighborhood of $665,000 on a purchase. You could do all that with 3.5% down. That's incredible. And then, of course, you would rent out those other 2 units and maybe get some cash flow and really build some family wealth. So there's some great wealth building strategies inherent in an FHA loan because of its low down payment abilities and its ability to buy multi-unit properties. So let's recap very quickly. Before I do that, can you please do me a favor? Because I really want to keep providing some good content for you as the Mortgage Patriot. So hit that subscribe button and hit a like if you would. And that really helps with the algorithms of YouTube and puts me in a spot where maybe people can see my content. That'd be appreciated. So thank you for that. But let's talk about the recap once again. FHA loans allow for low down payment scenarios, low FICO scores. It has greater latitude in your debt versus your income. And it provides for renovation loans if you're trying to, build something or repair something on a purchase that you wouldn't normally be able to come out of pocket for. And it allows for multi-unit purchases and still keep that 3.5% down scenario. So wonderful attributes to the FHA loan. The one downside is that ongoing monthly mortgage insurance premium, which can be either refinanced away or it'll be paid off otherwise over the course of the year. So you want to avoid that. But I can have strategies to help you offset that over time. So I am the Mortgage Patriot, Kevin Fagan, here on your side, and have a great day. Thank you.